love the channel and find it useful in becoming a happy retiree. Subscribe today. It's also going to be, and here's what this could mean for the economy, which benefits all of us, right? This is not just a what's my tax number versus your tax number. This is for everybody. Is that if you go back to 2002, 2003, GDP, or gross domestic product, averaged about 1.5%. Following the Bush tax cuts, and remember, this group of tax cuts, arguably vastly larger than what we saw in 2003, real GDP went from under 2% to over 4% the very next year. And then it stayed above 3% in 2005 and 2006. So it was a giant economic boost to America. The same thing's going to happen here in 2018 and 2019, 2020, arguably in a much bigger way. So when you hear that this isn't going to do anything for the economy, it's not going to stimulate growth, and because it's not going to stimulate growth, the Treasury's not going to collect enough in taxes, I don't buy that. I don't see how it's possible for this not to be a huge economic impact. So we're going to break down whether you're going to have more money in your wallet in 2018 because of the tax cuts or not. Small group of people, and I've run hundreds of calculations already, all scenarios, 50 grand, 100 grand of income, 150 grand, 200 grand, 250, married, no kids, 2 kids, big property tax deductions, big itemized deductions. Do they go away? Do they stay? Depends on what the standard deduction is relative to what you've been using itemized in the past. So there's a lot happening here, and we've got a calculator that gives us a really good indication of whether your taxes are going up, down, or staying flat. Lots of callers in the first half hour today where taxes are going down, and we're going to get a little bit of a Christmas bump here in going into 2018. This bill hasn't been signed yet. The Tax Cuts Job Act for 2018 hasn't quite been signed yet, but it's going to get signed. Maybe at the very end of the year, likely the very first days of 2018. And then starting in February 2019 or 2018, families are going to see their paycheck withholding change a little bit, and more money is going to come back into your wallet. I want to give you just a quick overview of the 10 biggest changes that are going to impact you in your wallet. And I have these, there's a lot to this. And I've read multiple versions from CPA firms and tax planning firms, and these are 20, 30, 40 page documents. I wanted to break this down into a 2 to 3 page document that gets to the crux of what most people really care about. And we did that right, and we just published it. I wrote it, most of them were Ryan Neely, my producer here, taking calls, patching them through. Ryan and I spent all morning writing this up. Remember, this is brand new stuff, and we are really, I don't know if there's any other show that's covering this specifically like we're doing right here on this special edition of Money Matters on WSB Radio. So on my website, wesmoss.com, go to the homepage. I'm going to list the 10 biggest tax changes that impact individuals. This is not we're not talking corporate cuts today. We're talking individual cuts, what it means for you and your family. So if you go to the homepage, just go to wesmoss.com, WESMOSS.com. Right on the homepage, you'll see, what do we title this thing? This is how new this is. It's going to be right on the homepage, what Trump's tax reform means for you. Homepage and under the Money tab, easy to find. And here are those top 10 things, and then we're going to go right back to the phones and understand your taxes. They're going up, down, or staying flat. So number one, federal tax brackets are changing. They're moving from 6 to 7 brackets. They get a little bit more specific too. The standard deduction doubles. This is a big part of the plan. It goes to 24 grand for a family, $12,000 for individuals. Number 3, the mortgage deduction changes. That one's pretty simple. It comes down to $750,000 from $1 million. 4, SALT, state and local tax deduction, is now capped at 10 grand. This is arguably the biggest single piece, biggest single change in this. And for those in really high tax states, again, you've heard this before, New York, California, New Jersey, that's where you're losing, especially high income earners losing a giant tax deduction. And this is where a lot of the angst on this tax bill from the wealthy that this cut was supposed to help so much. This is where a lot of the angst is coming, because if you're a big income earner in those high tax state tax brackets, You're losing massive, massive deductions. They're going from 100, 200,000 all the way down to 10. 5, the child tax credit massively increased. Number 6, the Obamacare individual mandate penalty removed. That's a big deal because the average penalty was almost $500 a year. But what is not changing or going away are the Obama era increases that you saw in Medicare taxes. That increase that happened several years ago, that's going to stay. Number 7, AMT, alternative minimum tax. That was retained, but you have more wiggle room here. Higher exemption amounts now for AMT. Number 8, charitable deduction limit goes up from 50% to 60%. That one's pretty simple. Number 9, new inflation measure. They're changing how quickly they change the tax brackets or where those tax brackets start. Chained link, very simply, they're moving to a chained CPI is where they're moving. So CPIUs or Consumer Price Index Urban, they're moving to the chain version. That goes up at a slower rate than the previous version. It's effectively it's essentially a covert way for the government to increase tax revenue over time. Number 10, capital gains tax remains largely the same as it has been in the past, and that's a huge sigh of relief. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.